So, buongiorno and good morning. This talk is going to be in English. I'm Italian, as you can probably guess by the surname, but in order to cater to our English-speaking guest, we're just going to do this in English. We're going to talk a little bit about risk, and specifically why risk is important. In DeFi, we never really cared too much about risk until very, very recently. And I want to take you through this over the next maybe 10, 15 minutes. A bit of context beforehand. In RedStone, we are the fastest growing oracle in the market. We're very modular. We work on 110 chains, over 200 clients, and like 1,400 assets by now. So as you can see, we have a very strong presence in the DeFi ecosystem. And this strong presence in the DeFi ecosystem is because we build for DeFi. We always cater to DeFi. We are trusted by some of the biggest players that are native DeFi players. And now, as more recently, we've been looking into institutions. We've been looking into RWAs. So we are striking partnerships and collaboration with a number of these new institutional people that are coming to DeFi. A name that is important to mention is Securitize. We are the official oracle for Securitize. Securitize is the #1 tokenization player in the space. And obviously, we created this partnership with them because it's very, very important for us to bring secure, reliable infrastructure also to these new people, these new institutional people that move into DeFi. When I started in the Oracle business, it was quite a bit ago. And at the time, our mandate was to just provide reliable and secure price data. And it was enough for an Oracle to just do that. There was nothing needed beside that. All the use cases were very much on, the more blockchain, like diligence side of things. So it was very important to provide this price in a timely manner, in a secure manner, in a reliable manner. But now, while that requirement is still present, and it will never go away, hopefully, there are many, many more use cases that came to DeFi. Therefore, we expanded our offering. And now we cover a number of use cases that you see. So we still have the Oracle feeds. There is a use case specifically for DeFi, but now we also have ultra-fast feeds with our Hyperliquid 3 protocol and product. We have proof of reserve that is very important for RWA and stablecoins. We have risk, which is Credora, and that is the company that we're going to talk about today. But also we have historical data. We have data for AI agents. Now we're working, and we just released a product to provide instant settlement to RWA through secondary liquidity. So there is a number of use cases. And I do personally believe that an Oracle needs to have that today to really compete in the market. Institutions, as you know better than me, they do not want to go to 5, 6 different providers for 5, 6 different things. They are quite similar, but not exactly the same thing. It's much easier to just provide a one-stop shop where you can actually help these people tokenize. You can actually help these people not only create a price data for their asset, but also propagate it and make sure to fulfill as many use cases as possible. In September 2025, our friend Vitalik tweeted something quite interesting and quite timely. He was saying that low-risk DeFi can be for Ethereum what search was for Google. And it's a very interesting angle. Like many of the Vitalik tweets, it's a little bit provocatory, but it's very true. There's always, in traditional finance, 2 sides of an investment. The 2 sides are return and risk. And in blockchain, we always thought about return, mostly. And nobody really thought about risk. But risk is very important. It's the other face of the same medal. And I'm saying this tweet is particularly timely because in 2025, we acquired Credora Network. And Credora Network was and is the leading risk rating provider for Web3. In traditional finance, risk is a known, well-accepted, well-famous concept. Whenever you have an ETF or whenever you have a traditional finance product, you need to get a risk rating. That's just how it works. In DeFi, we don't have that, and Credora brings that to the DeFi space. Same month, September, we started standardizing our risk methodology throughout DeFi. And we went through a couple of iterations to that. Obviously, Credora had their own methodology to start with, and then we improved it and we iterated on that. We landed on something that's a bit simpler than what is the traditional finance risk assessment. So the risk assessment in traditional finance goes from AAA all the way down to D, or I think CCC. But in DeFi, what we have is ratings from A+ to D with half a rating increment. So it goes A+, A, A-, and so on. But ultimately, the metric that we calculate is the same. It's called PSL, which stands for probability of significant loss, which is how likely it is to experience bad debt exceeding 1% of the principal over a year period. Very financial jargon, but effectively this is the unique number that tells you how risky a specific asset or a specific vault or a specific market is. The other thing that for us was very, very important was for Credora to be transparent. And while obviously this is a security assessment and a risk assessment, you cannot be 100% transparent on the way that you do the calculation and the algorithm that you have to calculate risk, because that will expose effectively a risk factor and a way for people to game the system. Our methodology is 100% public and it's 100% on our documentation. So you can see exactly what are the factors that we take into consideration when we actually assess the risk of a specific vault or a specific asset or a specific market. And the goal is obviously, to bridge institutions and the precision of TradFi with the dynamism and the speed of DeFi. So we solved what I believe is the biggest problem of traditional ratings, which is speed. In traditional ratings, you get a spot rating for a specific moment in time, and that is usually the same for 6 months, if everything goes well. Sometimes it's more than 6 months. In Credora, we are an infrastructure company as RedStone, obviously, so we deploy infrastructure to monitor these factors, and our ratings update within 24 hours. And you say, why within 24 hours and not instant? There is a good reason for that, which is you don't want too many rating updates, when stuff changes, when people are moving liquidity from one side to the other. But we get notified instantaneously by our infra, and then our quant take care of updating the rating within a few hours. We focused on 3 main verticals because we believe that these are the 3 more important verticals in DeFi that need rating. Assets, on one end, they need to have a foundational risk assessment, because at the end of the day, asset is the basis of everything that gets constructed on top of it. All of the markets, all of the strategies, all of the vaults. If the asset is not secure, they're not secure as a result. And then obviously we go into markets, so we work a lot with risk curators, like KVK, for example, Gauntlet, Stakehouse, Centaur, so on and so forth, to rate their own markets. As of today, we rated 100% of Spark saving markets and vaults, and 90% of Morpho vaults by TVL. So it's very, very important that we give as much coverage to the last of the 3 points, which is exactly vaults. So we're working with a lot of lending protocols as well, the ones that to make sure that everywhere we can find risk data and risk assessment. This image is a little small, but it tells you a bit more in depth how we map our rating to the traditional rating primitives. Right? So in TradFi, you see that there is like AA plus, AA, A minus, and they all correspond to our A plus rating. And then you can map effectively one-to-many the Credora ratings with the traditional finance rating. As I was saying before, the factor ultimately, it's always one, which is the PSL. So, and that is the result of our algorithmic calculation and our quant assessment that takes into consideration, I think, over 120 different indicators for each individual market and each individual asset, but ultimately gets to one number, and this is the number, the PSL. So if you fall as an asset or as a vault, as a market within a certain range of PSL, that's going to translate into one rating. Why the standard? Mostly because DeFi people like myself don't know about all of the rating standards and all of the big reports, and they cannot really make their mind up on these individual factors. So we wanted to summarize that into one number, one letter, so that it's very, very easy to understand. And at the same time, for traditional finance people, we do produce 22 to 25 pages report for each of the things that we rate that go in depth into all of these factors and into all of these calculations, but they are a supporting material, effectively, to the letter. So if you are a more traditional finance-minded person and want to see the report, it is there, and it's very complex and it's very thorough. But we wanted to make sure that this catered to both very, very experienced financial people and also DeFi people that don't know anything about risk rating like myself. As I was saying, we are live. We cover now over $10 billion in TVL. That number is actually much higher now. This slide needs to be updated. But we have 127 vault rated, we have 250 more for markets rated. And it's very, very important. And I'm not just saying to you these numbers to show off, but we're pointing it out because it's important to cover as much of the industry as possible. At the end of the day, as I was saying, standard risk rating are a thing in traditional finance, and they need to be a thing in DeFi if we want to grow up onto the next stage of finance. So we care a lot about these numbers because we want to make sure that we provide rating assessment across the board in as many places as possible. And an objection that we were having at the beginning, and we were also asking ourselves at the beginning, was, okay, we were doing this risk rating, this is great, we all know that these help, but are these a nice to have, or is this something that is actually needed in DeFi? Is it too early for DeFi to go into risk rating? Is it such a mature primitive? Turns out it's not too early, because these actually move markets and inform people's decision. When we rated Spark, this was in March this year, we published the risk rating across the all Spark saving markets. And 5 days later, their investment in USDTs and their deposits grew by $200 million plus. Now, this market, they used to be about $350 million in March, before we launched the risk rating, is $1.3 billion. And as much as correlation and causation is not the same thing, this is a pretty strong correlation that I like to point out. Now, with all the risk, with all the acts that we experience, it's very, very important that we understand the risk, and this is effectively what we provide. I want to take you over the next minute or so just to wrap up on the new things that we launched. We just launched a dashboard where you can see all of the risk rating all in one place. That's also important, right? Because you can compare it, you can simulate your portfolio, you can either connect your wallet, give a wallet address, or even just combine it yourself. And you get an instant calculation of what is your risk of the portfolio on average. It's app.credora.network. Go check it out. We just launched this in alpha version. So if you have any feedback, please do come to us with feedback. But there's going to be much more. There's going to be alerts on when the risk rating changed. There's going to be a lot of comparisons and a lot of simulations and data that we're bringing. So much of interest this particular product. We do believe that it provides the transparency needed. And in terms of what's next, we're already seeing people making financial decisions on risk rating, but also they're making products based on risk rating. We work with companies like Catalysis that does insurance on Morpho. Part of their premium calculation comes from Credora risk rating. We work with lending protocols like Lotus, where part of their APY calculation comes from the risk rating of Credora. We work with curators such as KPK, for example, and Gauntlet that do require risk rating as part of their due diligence when it comes to deciding if an asset can be listed and is secure enough to be listed. It's obviously not the all part, the all due diligence, because they do much, much more, but this is an indicator. So we do see Credora coming more and more into the profile of decision-making of people across DeFi. Please do build with us if you want to reach out. These are our contacts. You can go to RedStone.finance, especially in our documentation section. You find a lot around our methodology. You find a lot around everything that is the details on how we do rating. But also follow us on X, and that is the best way to get updated information on what we've been up to and what we're working on. In the meantime, thank you so much. I was Mike Massari. Thank you for your time.
Thank you, Mike.